the world holds its breath. China, with its vast economic might, is rumored to be on the brink of a seismic move backing its currency, the yuan, with gold. Such a decision would send shockwaves across the global financial system, challenging the long-standing dominance of the US dollar. The implications are far-reaching, potentially reshaping the geopolitical landscape and ushering in a new era of financial uncertainty. Imagine a world where the yuan, backed by the stability and allure of gold, rivals the dollar as the preferred currency for international trade and investment. Oil contracts, once settled in dollars, could shift to yuan, shaking the foundations of the petrodollar system. Countries, wary of relying solely on the dollar, might diversify their reserves, seeking refuge in the stability of gold-backed yuan. This is not merely a theoretical exercise. China has been steadily accumulating gold reserves for years, its motives shrouded in secrecy. Some analysts believe these reserves are the foundation for a future gold-backed yuan, a move that would send a powerful message to the world. The era of American financial hegemony is coming to an end. The potential consequences of such a move are staggering, demanding our attention and careful consideration. The global financial system as we know it hangs in the balance. The time to understand the implications is now, before the shadow of the golden dragon eclipses the dollar's reign. Are these big global shifts catching your interest? Make sure to subscribe to Mawaki Insights. We've got more in-depth analysis coming your way. For decades, China has kept its gold holdings closely guarded, a state secret rarely discussed in public. However, in recent years, glimpses of the dragon's hoard have emerged, revealing a concerted effort to amass vast quantities of the precious metal. Official figures from the People's Bank of China, while often lagging behind actual purchases, show a steady increase in gold reserves. But the true extent of China's gold holdings may be far greater than official figures suggest. Analysts point to significant gold imports, often routed through intermediaries in Hong Kong and other locations, as evidence of a clandestine accumulation strategy. Whispers circulate of vast gold stashes held off the books, their existence known only to a select few within the Chinese government. This relentless pursuit of gold has not gone unnoticed. Market observers and geopolitical analysts alike have speculated on China's motives, raising questions about the role gold might play in the country's long-term economic and geopolitical ambitions. Is China simply diversifying its reserves, hedging against a weakening dollar? Or is something more profound at play, a strategic move to challenge the existing global financial order? The answers to these questions remain elusive, shrouded in the same secrecy that surrounds China's gold reserves. Yet the sheer scale of China's gold accumulation cannot be ignored. It is a clear signal, a message whispered in the language of gold, that China is preparing for a future where the balance of financial power may look very different. China's economic rise has been nothing short of meteoric, capturing the world's attention. From a largely agrarian society just a few decades ago, it has transformed into a global economic powerhouse, showcasing rapid development and modernization. Its factories are churning out goods that reach every corner of the world, making China a central hub in global manufacturing. With this economic might has come a growing desire for greater influence on the global stage, a desire reflected in China's ambitions for its currency, the yuan. No longer content with the yuan's role as a primarily domestic currency, China has embarked on a multi-pronged strategy to internationalize it, aiming to elevate its status to that of a major global reserve currency. China has embarked on a multi-pronged strategy to internationalize it, seeking to elevate its status to that of a major global reserve currency. This ambition is evident in China's efforts to promote the yuan's use in cross-border trade and investment, encouraging businesses to settle transactions in yuan rather than relying on the US dollar. This ambition is evident in China's efforts to promote the yuan's use in cross-border trade and investment, encouraging businesses to settle transactions in yuan rather than relying on the US dollar. China has also established bilateral currency swap agreements with numerous countries, allowing them to bypass the dollar and conduct trade directly in yuan. These agreements, often struck with nations eager to reduce their reliance on the US financial system, have expanded the yuan's reach and influence, chipping away at the dollar's dominance. These agreements, often struck with nations eager to reduce their reliance on the US financial system, have expanded the yuan's reach and influence, chipping away at the dollar's dominance. The establishment of the Asian Infrastructure Investment Bank, AIIB, further underscores China's ambitions. The establishment of the Asian Infrastructure Investment Bank, AIIB, further underscores China's ambitions. This multilateral development bank, spearheaded by China and supported by a growing number of member countries, provides an alternative to the US-dominated World Bank and IMF. This multilateral development bank, spearheaded by China and supported by a growing number of member countries, provides an alternative to the US-dominated World Bank and IMF, offering loans and financing for infrastructure projects in Asia and beyond, often denominated in Yuan. Offering loans and financing for infrastructure projects in Asia and beyond, often denominated in Yuan. These initiatives, taken together, paint a clear picture. China is actively laying the groundwork for a future where the yuan plays a more prominent role in the global financial system. These initiatives, taken together, paint a clear picture. China is actively laying the groundwork for a future where the yuan plays a more prominent role in the global financial system. The question is not if the yuan will challenge the dollar's supremacy, but when and how. The world watches closely as China continues to push its currency onto the global stage. If these kinds of scenarios intrigue you, don't forget to subscribe to our channel and share this video with your friends. We're here to explore the future of geopolitics and economics. A new gold standard? Understanding China's motivation. The prospect of China backing its currency with gold has sparked intense debate and speculation among economists, policymakers, and financial experts worldwide. Why would China, a nation that has embraced digital currencies and fintech innovation, consider tethering its currency to a physical asset like gold, which seems almost anachronistic in the digital age? The answer, as with most things related to China's strategic thinking, is complex and multifaceted, involving a blend of economic pragmatism and long-term geopolitical strategy. One compelling argument centers on China's desire to break free from the shackles of the US-dominated financial system, which has long been a point of contention for Chinese policymakers. By backing the yuan with gold, China could potentially reduce its vulnerability to fluctuations in the US dollar, insulating its economy from the whims of American monetary policy and the broader volatility of global markets. This would grant China greater autonomy and control over its financial destiny, a key objective in its quest for global influence and economic sovereignty. Furthermore, a gold-backed yuan could serve as a powerful symbol of stability and reliability, particularly for countries wary of the perceived risks associated with the US dollar and its dominance. The dollar's status as the world's reserve currency has been increasingly questioned in recent years, particularly in the wake of the 2008 financial crisis and subsequent quantitative easing measures that have raised concerns about inflation and debt. A gold-backed yuan could offer a compelling alternative, attracting investment and bolstering China's standing as a responsible and dependable economic power on the global stage. Moreover, China's historical and cultural affinity for gold cannot be ignored, as it plays a significant role in the nation's identity. For centuries, gold has been revered in Chinese culture as a symbol of wealth, prosperity, and power, deeply embedded in the nation's traditions and values. Backing the yuan with gold would resonate deeply with the Chinese people, evoking a sense of national pride and confidence in their currency and their country's economic might, reinforcing the government's narrative of strength and stability. Ultimately, China's decision to back the yuan with gold, if it were to occur, would be driven by a complex interplay of economic, geopolitical, and historical factors, each contributing to a broader strategic vision. It would be a bold move, a signal to the world that China is ready to reshape the global financial order and assert its place as a leading economic power, challenging the status quo and redefining the rules of international finance. The dollar's dilemma, a loss of confidence and influence. The US dollar has reigned supreme as the world's reserve currency for decades, underpinning global trade and finance. Its stability and reliability have made it the cornerstone of international economic transactions. However, the potential emergence of a gold-backed yuan poses a direct challenge to the dollar's dominance, threatening to erode its status and diminish America's influence on the world stage. This shift could mark a significant turning point in global financial dynamics. A gold-backed yuan would likely trigger a shift in global reserve holdings, as central banks and institutional investors seek to diversify their portfolios and reduce their exposure to a potentially weakening dollar. This diversification is not just a financial strategy, but a necessary move to mitigate risks associated with over-reliance on a single currency. Reducing exposure to the dollar could lead to a significant sell-off of US Treasury bonds, traditionally seen as a safe haven asset, putting upward pressure on US interest rates and potentially hindering economic growth. The ripple effects of such a sell-off would be felt across various sectors, from small businesses to large corporations, impacting their ability to borrow and invest. Higher interest rates could stifle economic activity, making loans more expensive and slowing down consumer spending. This could lead to a broader economic slowdown, affecting employment rates and overall economic stability. Furthermore, the dollar's role as the primary currency for international trade, particularly in commodities like oil, could be undermined. Contracts currently denominated in dollars could shift to yuan, reducing demand for the dollar and potentially leading to a decline in its value. The shift in currency preference for trade could have a cascading effect on global markets, altering the balance of economic power. This would have significant implications for the US economy, potentially fueling inflation and eroding purchasing power. Beyond the economic consequences, a decline in the dollar's status would also have profound geopolitical implications. America's ability to project power and influence globally is inextricably linked to the dollar's dominance. A weaker dollar would diminish America's leverage in international affairs, potentially emboldening rivals and challenging the existing global order. The potential emergence of a gold-backed yuan represents a serious challenge to the US dollar's supremacy, one that could have far-reaching consequences for the American economy and its standing in the world. The US must recognize this threat and take steps to strengthen the dollar's position, ensuring its continued role as a stable and reliable global reserve currency. Proactive measures, such as reinforcing economic policies and fostering international alliances, will be crucial in maintaining the dollar's dominance. The stakes are high, and the decisions made today will shape the future of global economic and political landscapes. A coordinated effort is required to address these challenges and safeguard America's economic interests. The shifting tides of global finance demand vigilance and strategic action to preserve the dollar's pivotal role. The potential emergence of a gold-backed yuan represents a serious challenge to the US dollar's supremacy, one that could have far-reaching consequences for the American economy and its standing in the world. The US must recognize this threat and take steps to strengthen the dollar's position, ensuring its continued role as a stable and reliable global reserve currency. The US must recognize this threat and take steps to strengthen the dollar's position, ensuring its continued role as a stable and reliable global reserve currency. The US must recognize this threat and take steps to strengthen the dollar's position, ensuring its continued role as a stable and reliable global reserve currency. The US must recognize this threat and take steps to strengthen the dollar's position, ensuring its continued role as a stable and reliable global reserve currency. The US must recognize this threat and take steps to strengthen the dollar's position, ensuring its continued role as a stable and reliable global reserve currency. In this hypothetical future, the balance of power would shift dramatically. The US, long the world's economic leader, might find itself in a much weaker position. Meanwhile, China could become the anchor of a new gold-backed economic order. Whether or not China takes this step, the very fact that central banks are preparing for such scenarios shows us one thing: the world of finance is changing, and fast. If you're ready to stay ahead of these global shifts, subscribe to Mawaki Insights for deep dives into the future of geopolitics and economics. Share this video with friends who need to know what could be on the horizon.